If you clicked on this video, you're probably considering using the FHA loan. So today we are going to talk through some of the potential downsides to this loan type so that you can make the best decision for you and your family. I'm Nicole Nark, Arkansas real estate broker, and welcome back to my channel with videos to help you find your way home. Mortgage insurance can be the first downside to using this loan type because obviously that comes at a cost to you. So when it comes to mortgage insurance, with the FHA loan, you have two different types. You have upfront mortgage insurance as well as annual mortgage insurance. So the upfront mortgage insurance premium totals 1.75% of your loan amount. Now, this upfront premium can be due at closing, so you can bring the money and pay for it all up front, or you do have the ability to finance that into the loan. Now, most people will have this paid for upfront in their closing costs. So when you hear me talk about estimating maybe 3 to 4% of closing costs, I'm taking into consideration this FHA 1.75% here. The second type of mortgage insurance premium is an annual mortgage insurance premium, and that is 0.85% of your loan balance. So let's look at an example of what this would look like on a practical matter. If your loan balance was $200,000, we would take that balance and multiply it by the 0.85%, which would give us this $1,700. Now, this is an annual mortgage insurance premium. So in order to figure out how much that mortgage insurance is going to affect your monthly mortgage payment, we are going to divide that number by 12, and that will give us $141.67 per month. So that amount would be added into your normal mortgage payment that you pay every single month. This is significant because this mortgage insurance is on here for the life of the loan. That means if you keep the house 2 years and sell it, or if you keep the house the full 30 years and then you sell it, you will have this mortgage insurance grouped in with your monthly payment for the entirety of your loan. It never drops off. And this differs from PMI, which is private mortgage insurance that comes along with conventional loans. Now, conventional loans require mortgage insurance as well, but the difference is with FHA loans, this mortgage insurance is on for the life of the loan, whereas with conventional loans, their private mortgage insurance, or PMI, drops off at 20% equity when you've built up 20% ownership in the house and you only have 80% loan left. The downside of the FHA loan when it comes to mortgage insurance is that it never drops off. It's going to be on here for the life of the loan, and it could potentially make your mortgage payment higher as compared to other loan types. Each year, the Federal Housing Administration sets loan limits for the FHA loan, and this could be a potential downside to using this loan type depending on the value of the home that you were trying to buy. Typically, each year, FHA will increase these different limits, and these limits do vary based on area. For 2021, the lowest limit that they have, so the lowest maximum you can buy, depending on the area, is $356,362. So for example, this is the maximum purchase price anyone using the FHA loan can buy in Little Rock, in Central Arkansas, where I am. Based off of our median price point, FHA guidelines say that should be enough to get you a good home. Now, the highest limit that they have, or the ceiling limit, is $822,375. Now, this one is going to be in your much more expensive markets. This is the limit, for example, in San Francisco. So, depending on where you are, the FHA has set different limits for how high your loan purchase price can be. I will link in the description box a website where you can go and easily find the loan limit for your area and the area that you want to buy in. That way, you know up front if you will be able to use this loan type for your purchase. A potential downside to using the FHA loan is that they set very strict property standards on the condition of the home that you want to buy. The appraiser is going to be the person that enforces the FHA rules and regulations on their checklist and actually checks the house. The appraiser is going to go out and they're mainly looking for any health or safety concerns with the house. For example, they will check your foundation to make sure that they don't see any big foundation issues, because that would be a structural integrity issue. And they can be so picky that I've even seen them check things like the depth of stairs with a tape measure. Or, those railings that'll be around decks. I've even seen them, there's a regulation somewhere that says like the the verticals on the railings cannot be any more apart than like 6 inches. Like, there are some big things that you would want them to check, and there's some things that are just bizarre and crazy. I mentioned all of this to let you know that if you are looking to buy a foreclosure or a fixer upper because you've been watching a bunch of HGTV, just know that the FHA loan may have a problem with that house and decline to finance it based off of its condition. A downside to using the FHA loan is you may get denied the fixer-upper property that you want to turn into your dream home. The FHA loan allows for home buyers to buy with a higher debt-to-income ratio, lower credit score, and a smaller down payment. The FHA loan is primarily used by first-time home buyers. Now, it doesn't have to be. So with that being said, FHA loans can fall through. Sometimes you cannot secure the financing because of some reason, or maybe you did run into an issue when the appraiser went out to the house and deemed that that house wasn't the most healthy or safe home for you. So, with that being said, another downside to using the FHA loan is that it is not the strongest loan type. And I only mention this because you could, if your market is very active, potentially be beaten out on an offer because of a conventional or cash buyer going up against you. You may have different goals for your property. Maybe you want this to be an investment property, or maybe you are trying to acquire a house that you would turn into a rental. It is worth noting that a potential downside of the FHA loan is that it does have to be your primary residence. So what does that mean? It means that you are required to take occupancy within 60 days of buying this house. You also have to prove that you live there for at least 1 year. So don't feel like you have to live there for a full 30 years as your primary residence. It's just 1 year. Now, with the FHA loan, you can buy single family homes as well as duplexes, threeplexes, fourplexes. With that being said, if you live in one of those units, you can also still rent out those other units. And I think that's worth noting. Like we talked about earlier with the loan limits, they do differ based off of the number of families that can live in the dwelling. For example, if you are just buying a normal house in a subdivision, that's a single family household. Whereas a duplex would be a two family, fourplex would be four family, etc. And the FHA has changed those limits depending on how many families you can have in that household. So that's something to keep in mind. You definitely can use this for multifamily properties, fourplexes and below. But just know that the potential downside here is that if you weren't going to live in it, you're not going to be able to use this loan type. You do need to occupy it for at least 1 year. Let's go through the downsides really quick and do a recap. You will have mortgage insurance for the life of the loan if you use an FHA loan. Additionally, there are loan limits on borrowing, like we talked about. There are strict property standards. So if you're wanting to do a major fixer-upper property, you may need to look at a different loan type. Additionally, this is not the strongest loan type if you are in a multiple offer situation. And this home that you buy, whether it be a single family or all the way up to a fourplex, must be your primary residence for at least 1 year. So we've talked about some of the downsides of using the FHA loan. If you are more interested in knowing what the pros are as well as some of the requirements to qualify, I have made a full video on that already, and I will go ahead and link that above, so you should definitely check that out to do some further research and see if the pros outweigh the cons for you, and I will see you in that video.